Hey everybody, welcome back to the Wealth Journey. I was asked a question recently around when do you know when to sell a company? And it's a very good question. So I decided to try and simplify it and give you my view on it. And I boiled it down to that there are only three reasons why you should or would sell a stock in a company. The first is that a company stops delivering against what you expect. So poor execution of the business plan by the management team. Secondly, the price hits a point where you feel the company is overvalued. Therefore, returns in the future will be below what you're expecting or what the general market can provide. And finally, you find another business that has better growth prospects or outlook than the one you're currently invested in. This is generally, when you're buying growth companies, these three things are key, but it does actually apply to those which you might be holding when you are later on in your investment journey, so in retirement or preserving your pot. If you take Coca-Cola, Johnson & Johnson, or any other dividend-paying company for that matter, you may choose to just hold them even if sales or growth hit a flat spot for a few years. This is because you know that you have income from the dividends which more than cover what you need, and the share price is secondary or not really a factor that you're bothered or concerned about. This is obviously subject to the company not cutting their dividends because they have enough free cash flow to cover it. So let's take those three things and break them down into a little bit more detail. If a company stops delivering against its plan, point one, well, it won't be producing the revenues, profits, or cutting the costs that investors and the market are expecting. So the share price will most probably begin to decline as investors move their money to other companies or assets that are delivering on their plans. Point two, if a company becomes overvalued, well, similar to the first point really, people will start to move their money out of the company and into others that have more room to run and grow for them at the rate that they are actually expected. And lastly, if you find another business which you think has better growth prospects, well, you might sell a position, buy into the new position, as long as you understand the business, the model and the market that they're in, and have conviction that that management team can execute on the plan. I hope this has been of some interest to you. If it has, check out some of my other content. But until next time, stay safe.